Okay, George, here's the fourth try, but we've got an extra day of data from what I was trying to show you yesterday. But here's ABBV. This is a chart going back to April of 2021, so roughly 3 years. And we're going back that far to look for previous highs. And we're going to mark points where we have some congestion. And the first one we have is right here. This is a high, and this is a high, and you can see as soon as we reach that high, we have congestion. We have a high here, 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 and some congestion here. So we mark a green line on that one. Here we have a high here, and some congestion. And then we're going to look at two other things. So we're going to look at historical highs on all of these charts. We're going to look at moving averages. We're going to look at these blue moving averages, which are different methods of calculating the 50-day moving average, and then red ones, which are different ways of calculating the 200-day moving average. One is taking the 50 days and figuring out the average. That's a simple moving average. The other one is the extended moving average, and that's where you weight the values of each of the 50 days, but you give more weight in the averaging to the most recent ones and less weight to the earlier ones in the beginning of the 50 days. So you have, that's the SMA and the EMA. The EMA is the dotted one, the SMA is the solid one. But different traders use different ones. That's why you have to look at both of them. Then we're going to look at momentum. So we're looking at averages, and then we're looking at momentum. Momentum, that's building up steam for either a pop or a drop. Let's look at Abbott now. So Abbott, we've drawn our three lines. We're going to look at another thing which is called a Fibonacci ratio. This is looking at the trends in the market that tend to obey ratios. And this is where the algorithmic traders come in. They're very big on looking at ratios in their algorithms. And the ratios they look at are 100%, 0% of course, and then 38.2 and 61.8. And the sum of those two is 100. There are other minor points in there, but those are the ones for simplicity we will look at and see how important they have been in the past, and that will help us predict where we're going in the future. So Abbott. Let's look at Abbott's movements since April of last year. So 1 year ago, where we had this high, which was coincidental with these two highs. Then we dropped to this low. This low was almost coincidental with these low points here. So we could take our 0 point on a Fibonacci and actually put it right there, which is more an average of these low points, the average of that congestion area, to give us more accuracy. So where did we go after we dropped to this 0 point? We went up to this 61.8%. Then we dropped down to 38.2. Then we went up to 61.8. We were there for so long, like a week, couldn't get any traction above it, so sellers came in and looked at other stocks to invest in. They came back, now took a new look at Abbott and decided that the momentum is there to move up after these heavy selling days in here, these 3 days in particular, then 2 days where we couldn't get an up day, and then 3 more days of selling, and then the market makers figured, well, now's the time to start buying because we're testing a congestion point here where it's not dropping, it's not going up. Let's help it to go up. So it moves up. And where does it first go to? 61.8. And it hangs around there for like 8 or 9 days. And where does it go next? Slowly but steadily back up to the 100% point, where it stays for 5 days. Then it moves to a predicted 127.2, which is a minor Fibonacci. And then where did it stop? 138.2. So we had a 38.2, which is important. So why wouldn't we have a 138.2, which is important? And then we dropped back. And what I was telling you yesterday, would have told you yesterday if the video had worked, is that once you hit this point, I would expect the stock to pull back. That's exactly what happened. So now, and where does it pull back to? 127.2, but also to this previous high. So now we want to look and see if there's enough buyers to push it beyond this point. And where is it going to go back to? It's going to go back to 138.2, and it's going to start jittering there again because there's uncertainty if there's still buyers left at that point. Remember, most of the trading is done by computers, so you want to think like a computer. If you wanted to buy the stock, you would not buy it until you have 2 days above 127.2. Now you're committed to the stock. The next time you would buy it is after it's had 2 days above 138.2. And then the next place it's going to go is 161.8. It may take a while to get there, but it's still always a risk anytime you buy a stock that's had its second high since April of 2022. So 2 years to get to this point. You know, is it going to be 2 years before we get to the next high, which we've never seen before? That's what you got to ask yourself. Now you look at the momentum indicators. We're not looking at the average volumes because they haven't been important, or the moving averages because they haven't been important. Now we're looking at the momentum. The momentum in getting price from here to here. Momentum indicators showed that at the low price, the momentum indicators were both at the low. The yellow-blue is a momentum indicator over 40 days. The pink-red dashed is a momentum indicator over 12 days. So you have a fast-moving and a slow-moving. And in the arc of a slow-moving, you have several peaks of a fast-moving. But now we're looking at both the fast and the slow at being overbought. Not a time to buy. The best time to buy is when at least the pink one comes down here, like we saw here. That was a good time to buy? No, it wasn't, because the slow-moving average was still coming down. So the best time to buy is when both of them are at the bottom, like back here. They were both at the bottom, and look what happened as it ran up. Here they're fairly both at the bottom, and the stock ran up a bit, but it pulled down, but the blue line still continued to make a slow move upwards. So for the patient, you wait until the yellow-blue line is at the bottom, and then you suffer through the swings and peaks and valleys of the fast-moving indicator. Then they both get at the top. You can sell and buy at a lower point. You could sell here and then buy when they're both down here and then ride it back up again, or you can just hold. And you're a long-term buy and hold. So you want to do that, but you don't want to do that until they've bottomed out. The next stock we want to look at that I love is ET. ET had a dividend on Monday, and so I'm looking at this chart the same way that I looked at the other one to see when is the time that I want to invest that dividend into the stock again. Well, here's its high back in the inception of the stock in 2019, December of 2019. It had a high here. I think we need to go back a little bit further to make, no, we don't. So there we go. We had a point here where we've hit 2 peaks right there. So does that coincide with any other highs? Not particularly, but they are important because they're the 2 most recent highs. So we take our Fibonacci, we draw it from the top to the bottom, and the bottom would probably be an average of the noise down here. There we go. So where do we see the stock going from here? Well, it went to 38.2. Then it came down. Then it moved slowly up. Couldn't make the 61.8, but it came back to find a point to test buyers at the 27.2. Then it moved up to the 38, the 61, back down to the 38, up to the 61, down to the 200, up to the 61, couldn't break it, so it came back down to look for a place for new buyers again. Was there confidence at the 200-day moving average? Yes, there was. Up again, went above the 61.8, couldn't make it to the 78.6, so it came back down to the 200. And everywhere along the line, it came back and tested the 200 moving average. And as soon as it hit the 200, buyers moved in. Now, where are we? We've tested the 200 1, 2, 3 times towards the end of the year. Now, what have we done? We've hit 78.6. We broke out, couldn't hold it, came back down. And where did we come back down? We came back down to the blue line, the 50 moving average to test that one. And then we're up. And now we've got some action here, and we've broken the 78.6. I would look for, let me try to open that up a little bit more. I would look for, there's an up day today, a down day yesterday, followed by a series of up days leading into the dividend. I would wait for one more up day, and I would say that it's time to buy ET. What do the momentum indicators say, however? They say that it's not a good time. They say that the slow moving indicator is moving down, but the faster moving, the 12 average, is going up, but it's at its top. So it's the momentum indicators are saying it's not a good time to buy. So I'm going to wait until the momentum indicators are back down again. But I'm going to check it every day to see what happens. A next one I love is Simon Property Group. I think you've got that stock. Let's do the same study on Simon Property Group. And let's look at, let's look at the stock performance since 2021. The green line is these highs here, 1, 2, 3 highs. Draw our Fibonacci from the top to the bottom and predict movement going forward. How well did it do? Well, it hit 38% and chugged along there, also along the 50 and the 200. It moved up to the 50% Fibonacci, had one spike of a day, wasn't followed by the next day, was a red day the next day, so down it went. Chugged along, unable to break above the 50, so there was sellers at the 50. We saw in the previous stock that there were, when we were looking at ABBV, there were buyers at the moving averages. Now there are sellers at the moving averages. But when it finally does break the 50 and the 200, it moves up. It is unable to make the 50%, so down it goes again. It makes the 38.2, can't break it, down it goes again. Tries again after it's got this multiple, where are we here? Let's do a green line here. This isn't a line we want to take note of because it's multiple lows. 1, 2, 3, almost 4 low points. It bounces off the low point, comes back nearly to test it, but buyers stepped in, breaks both of the moving averages, comes down to test the moving average. Then where does it go from there? Churns around the 50%, breaks up to below the 61, but can't continue, so it comes down to the 61, goes back to its previous high, comes down below the 61, but it's supported by the 50. Now it's on its way to 78.6. So when Simon Property Group has its dividend payment early next month or the end of this month, one or the other, I'm going to immediately turn that into buying more Simon Property Group. However, the momentum indicators show that we're at the top. So I will review the momentum indicators again and find out if it's the right time to buy when I have the dividend yield. So those are 3 really good stocks and an indication of how to use Fibonacci ratios. They are extremely powerful. Remember, you're looking at a historic high and a historic low. And if you had drawn that Fibonacci on this date right here, September 23rd, 2022, and said, I'm predicting the future movement of this stock based on these two values and these ratios, you would have been spot on, because you can see 50%, 38%, 61.8%, 78.6%. It's moving between those ratios beautifully.